Good morning, this is Robin Bieber on ChartTalk on the 9th of June at 6:55 in the morning London time. The chart in front of us is RBOB first line continuation. More of that in a moment, but suffice to say that RBOB is once again the most important contract on the board to watch very closely. This time yesterday morning, the market was surging higher. It was too much too soon. The 5-day gaps were massive. Remember, the contracts in an uptrend like to hug the 5-day moving averages. They don't like it when it's over $1.40 away from the price action. And yesterday morning we were over $2 a barrel above the 5-day moving average on crude. We were near $3 a barrel above the market on RBOB. It was too much too soon. So a correction back was not altogether surprising, particularly after targets higher had been hit on WTI and RBOB and very closely neared on the rest. In other words, there was a momentum was building to knock the market. There was very much a case of running into key resistances where, and particularly into the gap zone on the crudes, which are the gaps left by the 6th to the 9th of March price collapse over that dreadful weekend. RBOB now is a key contract to watch, and this is the level, 123.48. It's the most important resistance on the board. If RBOB can make its way back above there, it will flag a resumption of upside potential. Now, if we look also, remember 123.48, key resistance, and now we're looking at July RBOB. It didn't even near its 5-day moving average, but the 5-day moving average comes in today around 117.70, thereabouts. That is the most important support on the board. If that holds, everything's fine. If we fail at the 5-day moving average on RBOB, it flags a loss of momentum higher generally, and it flags a move down to the 8-day moving average, which is much more tenable. The rule of thumb is above the 5-day moving average, and an uptrend in this case has momentum higher and it's seeking out higher, stronger numbers. A failure at the 5-day suggests a loss of momentum higher and a dip to the more tenable 8-day moving average where the uptrend is still intact. Failures at the 8-day flag weakness and a change in direction. So we're above the 5-day moving averages on everything. The crudes are testing them as we speak, but the products are still a little way above them. For any serious change in direction, down, for example, down to the 8-day moving average, you need the products to fail at the 5s, and at the moment they're holding. Therefore, watch RBOB very closely today. 123.48 is critical resistance, the most important on the board, and the 5-day moving average support around 117.70, critical support. Now, if we look at the crudes, and we'll start with WTI, it hit its target high at a 40.11 yesterday and slid away. It's now holding the 5-day at around 38.19. This must hold. We're just above here. If we fail, look for a move back to the 8-day around 37.34. But if the products are not joining in by being below the 5s, even though the crudes are, it could be a full step lower. So be very careful indeed. Brent is exactly the same, testing its 5-day around 40.76. This must hold or it slides to the 8-day around 39.96, with the caveat that any drive south is going to lack momentum unless the products have joined in. Slightly worrying that both the crudes have got negative stochastics. That is a worry. If we look at heating oil, it's above its 5-day around about 110.70 area. That must hold or it's going to dip down to about 108.70, another 200 points down to the 8-day. Its stochastic is threatening to turn negative, but it has not done so yet. In order for there to be serious momentum higher, it would be a good idea if it moved over its bull-bear pivot at 114.94. And equally, the bull-bear pivot on RBOB is 121.78. If it can get above there, then there's some upside developing. Gas oil above its 5-day around 319 and a quarter. It's failed to break through its 336 target zone here. A move and close back over 336 would suggest more upside yet. So the message is generally very clear. Watch the 5-day moving averages like a hawk today, particularly on the products. You could easily see the crudes fail at their 5s and meander a little bit south. But unless the products have failed at their 5s, any move lower is dubious. It needs products below the 5-day moving average to turn a little dip into more of a correction down to the 8-day moving averages. Watch RBOB like a hawk at 123.48 key resistance and 117.70 key support. These are the two most important levels on the board today. And if we look at structure, DEC Red DEC is well above the 5-day moving average at minus 186. It still looks steady. Stochastic wobbling a little bit, and the 60-minute stochastic over on the left here is suggesting upside. The DEC Red DEC on Brent, it's struggling with its 100-day moving average at 268. It needs to move back over there to get back to minus 232, the virtually achieved target from yesterday. Stochastic wobbling a bit, but the 60-minute chart here on the left is suggesting upside for the morning. The 60-minute chart on Brent is suggesting a recovery, and for this morning, and on RBOB pretty much the same. So the immediate indicators are that the market should correct back from yesterday's dump. Watch the 5-day moving averages generally, and very specifically on the products. They are the key. If they hold their 5-day moving average, any dip on the crude is likely to get absorbed. That's all for today, folks. Good luck, good trading, and bon appetit.